Live from the floor of the NYSE, that's a market open.
Hello, how are you today? I hope you had a good trading week last week. I want to welcome you here to this Emini S&P 500 live trading room. We are trading this market here on the 5-minute chart, and we have been doing this for roughly 19 weeks already. So we have video recordings of the last 19 weeks. At the moment, we are roughly 20% positive on our total account after 19 weeks. So that is roughly 4 months, 4 or 5 months. I think the result is good so far. We could have achieved more than 20%, but I believe 20% is well on the way for our profit target. We would like to achieve, let's say, 50 to 100% per year. But let's keep it at 50 to be defensive. Furthermore, we would like to achieve roughly 5 to 10% per month, and I think we are also on a good track doing that. If we can achieve 5% per month, we will end up way higher than 50% at the end of the year. I would say 3% per month is the minimum target, but we would like to achieve 5 to 10%. Okay, as you can see here, we have 2 accounts at the moment, but going forward, I will be eliminating 1 account again. I was installing this extra account last week because I would like to trade 2 time frames. And I needed 2 accounts to do that properly, because if you are short on 1 time frame, then you cannot enter long positions easily on the other time frame, because then you will eliminate these short positions. So you cannot hold on to positions essentially in both directions with only 1 account. My purpose, or the aim, the goal for this 2 accounts was that I will be trading 1 60-minute chart and 1 5-minute chart. And if I'm long on the 60-minute chart, which should give larger profit targets and longer distances, then I would be only trading short on the 5-minute chart. This should eliminate some risk. But I think it's getting very technical, and it will be too complicated going forward with this YouTube project. Maybe this is something we will look at a little bit later again. But at the moment, this is too overwhelming, because I would like to show you a few things here. I would like to educate you in a few things along the way as well. That is very important for me, the added value for each and everyone participating. Furthermore, as you can see, we have only 1 window available, so I can only show you this 1 window at the same time. Therefore, 2 accounts which are traded on different windows here are not visible. So I can't show you each and every trade, and it's getting a bit complicated showing you these strategies I'm applying here to the market. Anyway, so I think going forward, 1 account will be eliminated. I was also asked to trade real money, and I was talking about this earlier, and I was saying that I will be doing that at 1 point in time. Therefore, I think going forward, I will be trading a real account. Also, I was asked what are the minimum requirements to be trading this market, because it seems that many people would not like to put so much money on the line, especially in the very beginning of their trading business. Therefore, I would like to make it as realistic as possible. So I will install a minimum account, which I believe is the right way to go about this. For each contract you trade, for example, in this case we trade 5 contracts. We are in a long position at the moment from 54, 2,154. So basically this market is traded in contracts, and the value of one contract, or the point profit of one contract, is around $50. A point, so for example from 54 to 55, can be further divided into ticks, and one point makes 4 ticks, so a quarter of a point. One tick is $12.5 with one contract, so 1 point is $50. It shows you that in one bar almost we can already make 3 points roughly, or 2 points. So that would mean $100 profit only in one bar, so in a 5-minute time frame. I know that there are brokers out there who offer you margin requirements of $500 per contract for this Emini S&P 500. I have also seen brokers who have a much larger margin requirement of $2,500 per contract. But taking this into consideration, I would recommend an account size of roughly $5,000 for one single contract. This will give you enough room to make errors along the way and have losing trades in a row. Let's say statistics normally suggest that you will at one point in time have 5 to 10 losing trades in a row. So we take the maximum, 10 losing trades in a row. So this drawdown we will calculate. One losing trade for me is roughly 5 points. So 5 points, one contract times 50, so 5 times 50 would be $250. Now imagine you have a $500 account. You can only make one losing trade, or in this case you make 2 losing trades, because you cannot trade any more contracts if you have only $250 in your account. So essentially, if you make one losing trade, you already eliminated the possibility of you trading. Furthermore, the half of your account, 50% of your account. However, if you trade a $5,000 account and you have 10 losing trades in a row, this would eliminate 50% of your account. But still you will be able to trade with one contract. Furthermore, you have a lot of room for error, so you can keep going after that happened. So I would recommend whichever broker you choose, and you can choose any broker, I would recommend not paying more than $2 for one side. So for one entry, let's say you enter at 52s for buy order. For one contract you pay $2 to enter the market, and to exit the market you pay another $2. So they call it a round trip. So a round trip normally should not cost you more than $4. You can find brokers who are cheaper, and you can find brokers who are much more expensive than this. But I would say the average is around 4. I would not exceed these values, because commissions will come into play depending on your trading style. If you are a swing trader and you make large moves, 10 points, 20 points, and you have open positions during the night hours, there are brokers with low margin requirements, such as I said, $500. So these could be quite useful if you do such large overnight positions, because the margin requirements for overnight with some brokers exceed $5,000. So you can find brokers according to this, but I believe most important would be the commission. Take as a rule of thumb, one contract, $5,000. So that's what we will be doing also here going forward. I will be installing this account so we can see the trade performance. If we can grow a $5,000 account, we can grow any kind of account size. So you can just multiply that. Let's say you have a $100,000 trading account then you could be trading 20 contracts instead of one. Easy calculation, 5,000 is easily multipliable. But let me just recommend a thing to you. If you trade really, if you happen to have 100,000 trading account, I would not recommend you doing 20 contracts. Even though the earnings potential is quite large, I would reduce that to 5 to 10 contracts, because at the end of the day, if you can grow your account substantially and slowly, sustainably, let's say, and your risk is small, you will be very well off at a certain point. But this is not something which every one of us can do. I believe many people do not have $100,000 trading account, so we have to push the limit a little bit on our side, and we have to take a few more risks in order to be successful. Also, if you're professional, you can trade these kind of accounts very aggressively, even exceeding 100,000. You can go up to 1 million, I would say, trading very aggressive in this Emini S&P 500, exceeding these account values. I would not recommending trading this market. You should be changing to the underlying real S&P future or any other market, because the liquidity, even it is very high here. You see 10 to 20,000 contracts traded on average. But imagine you want to place a 1,000 contract order here, which is easily possible with $1 million account, but that would be possible, but it might not be filled, because there are many others waiting in line as well to be filled. So to fill a 1,000 contract order might be a little bit overwhelming. Okay, anyway, let's not talk about the millions. We want to achieve a stable, sustainable income. That is most important, and we want to grow our account substantially. This can turn into a business, I would say, but $5,000 is not a business. So take it as it is. Take it as a hobby first. Make it your passion if you will, if you want. Keep going, learning and getting information. Do not eliminate a 20, 30,000 US dollars account. And I did that in the first 5 years, roughly, trading years. I was eliminating such an account. I heard of people who eliminated much larger accounts and in a much shorter time frame, but I needed roughly 5 years to do that. So it was a slow, steady downward momentum. And recently, since last 2-3 years, I'm trading positive and stable. I have fixed my strategies, so everything seems to be falling in place. It has nothing to do with the market in general, because I trade either way, positive and negative, short and long. But I believe what I'm doing here can be beneficial. So take it slow in the beginning, trade a demo account. That's why I'm trading a demo account here, because I don't want to advertise that you should take real money in your hands at this point, especially on a YouTube level. I don't know exactly about what kind of people we have watching, but I believe if you are a very, very rich person, you might not necessarily be taking YouTube as a platform for learning. So I would assume that many of the viewers here on YouTube are normal people who would like to learn something and have a little bit of extra cash in their hands to do such projects. So this is okay. I mean, if you are a multimillionaire, you probably will go to a financial advisor who will give you bad financial advice and then blow up your $1 million account. You will not believe someone like us showing you how to trade properly and make money. But this just comes down to understanding. This is not made for everyone, and probably only those who will see this will be benefiting from this in the future. So let God decide who will see this and who can benefit from this approach. Okay, anyway, So that's what we will do in the future. We will go forward with a small real account to make it realistic, but I would still recommend you also trading on a demo account just to get more experience. Don't blow up $20,000 because this is much better invested if you find something that works for yourself. If you have a $20,000 trading account, you can do a lot, or $30,000 account. As I said, this is a very good account size, 30. That's why I chose to trade 30,000, because it can generate a normal income, I would say. People worldwide, in some places probably not, but in many places you could be living off of this money. But I would not recommend that you take out money from your trading account, especially in the beginning. You should be trading at least for 6 months or quarterly, and take out money quarterly or every 6 months, if you will. You cannot expect to take out money every month, because this would just increase your exposure and your risk, and would put you under a certain amount of psychological pressure. So don't do that, even you have a $30,000 account. If you have a $100,000 trading account, let's say, and you made 10%, of course you can pay out from there, because as I said, the larger your account, you can take smaller risks and still make money, pay out of these accounts. But if you are trading a $3,000 or $5,000 account, let's keep it at 5,000. I always say 3, because this is roughly my rule of thumb. But 5,000 is much more safe just to begin with. 3 is already marginal, I would say. It's a risky small account. If you have a few losing trades, you're already under pressure. So let's keep it at 5. But if you have a $5,000 account, what you can pay out is $200, $300, $400 per month. That is not worth it. So you grow your account, wait a couple of months, then you might be thinking about paying out if you like. Otherwise, grow your account exponentially. I would try to grow an account to 100,000. So if I'm lucky, I can grow this $5,000 account into a $100,000 account. That's what the ultimate goal is, I would say, but that takes at least years, I would say. That takes 2-3 years at least to do that, even more. But we can see, maybe we get lucky, maybe we have a few lucky shots, and we have good news supporting our trades. Because there are some days, very interesting days, such as the Brexit, for example. That was just happening very recently. Maybe you have heard about it. I'm sure everyone knows about these scenarios. So the UK exited the European Union, and we had a very sharp downside move in this market, roughly 120 points downside move. So it was a very easy overnight trade, and it happened exactly after the news appeared. So before the news came out, the market spiked in anticipation of positive outcome, because nobody was really expecting this. But however, it happened, so it was a very negative news, and right from that release, we had a very, very steep decline in the market. But you could have entered in these positions. That is easy to enter because it was negative news, so there's only one way the market can go, which is downward. A very easy trade, and it was possible because you had a time frame of at least 1 hour to enter the market. It didn't make 100 points in 5 seconds, so you had 1 hour to enter at any point in time in a short position. And in these scenarios, you can double up your account. You can roughly double up an account with 100 points moves. And 100 points is actually not that much. It's 5% of the total S&P 500 value. And if you have bad news, 5% can easily be achieved in any kind of retracement. So these are opportunities we will also be looking at later. And imagine you can just, you can make 50%, or you can double up your account in one night. That would be absolutely brilliant, especially for smaller accounts. You will not be taking the same risk, so you just take normal trades, I would say, in the middle of the night, because you have volume. You take normal trades according to your strategies, your rules, and if you happen to be in a positive trade, you can just let it run. You can do that 2-3 times, and if you're lucky, You will not be taken out of this trade break even, and you can just, as I said, let the trade run until you achieved your profit targets. I would say for kind of news-based trading, depending on the size and the value of the news, a move from 1 to 5% is realistic. So for any kind of market information, market news, this kind of movements are expected. Also, if you have a market crash like 2008, was very negative. Negative news fueled this decline. Not an easy thing to trade, not very easy to enter, because the market is very volatile. But if you happen to be in a positive trade and such a crash happens, and it has to happen every couple of years, because otherwise the market could not be sustainable. We cannot go only in one direction. So we need this kind of correction at one point in time. Therefore, you can also participate in those. If you're a bit experienced and you enter in the right spot and you're not taken out of a trade, let's say break even, because you would not be taking the same risk. You would not take 100 points as a risk, rather your normal trading strategy. But if you happen to be in a positive trade, you can just let it run and double up your account this way. Okay, anyway. So let's see. Maybe the next crash is just coming in the next year. Well, the market is at record highs at the moment. If you have a look at the charts, we are really expecting large retracements going forward. So I think you should be, if you have any investments which are only in long positions, you should really think about taking them out of this market sooner or later, or hedge these positions with short positions as well. This is what the Emini is also traded for on a professional level. You hedge your positions because you don't have to put so much money down in the line here. If you, for example, have a long investment in the real S&P 500 or any other correlated market which correlates with the S&P, normally many markets correlate with this. If we have positive news, positive economy, so stocks are going up and the S&P goes up. So very many correlated markets, even internationally. So let's say you have $1 million in a bank account in long positions only, buying the S&P 500. You only need, I don't know exactly what the calculation, but roughly $30,000 account, like this one here. Again, the same calculation to hedge positions in this $1 million account. So you can take short positions here, and you can completely eliminate the risk in the $1 million account. If an event happens and you cannot liquidate quickly and easily on your $1 million account, let's say it's invested into a fund, or it's invested somewhere, and you don't want to shift around this 1 million, you can just be taking trades here on the Emini, eliminating the risk and then transferring the positive or negative cash from one account to the other. Let's say we are here in long positions, 4 long positions, 54.29. You can already see that we are pushing positive. But I think we talked a lot about this. Anyway, I think I will be moving forward, and I will be trying to do this rest of this session in 10 minutes, because this is what this channel is also about, that we will be showing you the trades. So you can just look at the total P&L, how that is changing around. So nothing significant now, 2 accounts a bit minus here, 150. But let's move forward. So we have an interesting breakout, but a reversal back into range. You can see how many trades I make. These are single contract trades. So if I get signals, I will be entering. But as I said, going forward, we will be eliminating these 2 accounts. This is also a very good clean breakout trade. Not a very good position, 53s here, but still the breakout appeared, and it seems to be a good entry point. We should not be entering at 53s, but this was still an open position. So I'm in positions 5 long and 5 short on the other account just to balance out the risk. But we should be in this trade a little bit earlier, right from the open for a long position, breaking out. These are usually the trades we make. So this is the strategy which I follow. Very simple, very straightforward, easy to explain to you. And we use two indicators, trading the Emini S&P 500, which is the ATR, and also the volume. So ATR here is the blue trend line that is now at 1.56, and the volume is just below the real chart, 3,000, 4,000, 6,000. So you can see the volume increasing here quite rapidly. All right. But I will be explaining to you in each and every video something, well, not necessarily new, but I will repeat myself from time to time and try to implement this information. If you don't understand, please ask me any questions on Discord. This is a free chaplet application you can download on your iPhone, for example, and then you can ask me there any questions. It's a very useful tool because you can stay in there as a member of Discord, and the link is below in the description. Exactly, subscription. So please subscribe to my channel and like my videos. That would be very helpful, and I appreciate each and every one subscriber and each and every one view you generate for these videos. Hopefully I can reach out to as many people as possible, because I will be able to give them some support for their trading business. I try to make it as simple as possible. So let's move forward, because I can't really show you anything here on this day. For example, here, this could be interesting. Let me see. So this is what we normally trade. Don't look at the positions, it's not so important at this point. But we already, now we open, the market opens at 9:30 US Eastern. So we have positions, but we closed our positions now. But we still have short positions, I believe, closed as well at this point. Not very visible on the other chart. However, I will be drawing these trend lines. So the blue trend lines, I will be drawing two of those, one at the low and one of the high of the pre-opening session. And the pre-opening session I define personally, or let's say is defined from 9:30 backwards in time to the market close of yesterday. So you will have a high like this very long bar here at around 8:30, and this will define the high of the session, pre-opening session. And then you have the same for the low of the pre-opening session. So the lowest price traded, you will be drawing this trend line. And what we would like to achieve is that we approach this trend line and we are already in a positive trade. So we have to generate signals and be in positive trades right approaching these trend lines. So for example, from 57.50 I got a short signal and I entered the market in trend direction, or not trend direction, we don't know where the market is going, but towards the breakout. Because we are quite near to that breakout level, therefore we will be taking a short position in this case. And what we would like to achieve is that we anticipate this breakout and see more volume coming in. Our profit target is exactly 3 times the ATR of the first bar of this session. So I believe on this day it was around 1.75, 2 points. So our profit target would be roughly 5 to 6 points. Okay, very straightforward. However, now we break back into range and we should be looking at liquidating our position. So this is an added strategy. If you have an immediate reversal, you should be looking at reversing your position as well. But this will come later. I will just show you what I'm doing here roughly, and I will explain a few things here along the way. Okay, so let's move forward, because we do not really trade here on this day anymore. We even have positions open, but they are the same. So here our profit target was 42 and we hit our profit target. However, very late in the session, very difficult to predict this late breakout, so we can't really do anything about this. Sometimes we are lucky and we are in such a trade, but on this day we got stopped out earlier. Okay, I believe I will be closing all positions at this point. The account data, by the way, is not very 100% accurate. You could see that also in the previous videos. So you see, for example, here 91.43 is a different value. But anyway, we should be looking at only one thing, and this is the trade performance, because I did my calculations and this seems to be correct, trade performance, because we have a few trades accounted for here already. So the account data is not necessarily correct, as you can see here in the middle of the chart, just above the actual charting window, but this trade performance is accurate. So our calculation here, we can just generate for each and every day and each and every week. So this calculation now was made from the 1st of August to the 1st of October. And we press generate, which is a very useful tool, and we have a total net profit in this 2 months of 5,728.46. And you can see gross profit, commissions, gross loss, and so on. These are very interesting factors. We have a total number of trades, 150%. Profitable is only 34%. That is not much, but I can tell you that break-even trades, the trades where we put our stop to the same price where we entered, break-even trades, so we got out of the market with no loss, no profit, only we paid $4 commission for the round trip. And these break-even trades are accounted for in the number of losing trades category here, so 99. And we have 0 break-even trades, so that is not accounted for properly. Therefore we have a little bit of a wrong percentage value there, but I hope I can eliminate this and make my own Excel sheet in the background showing you the actual break-even number of break-even trades and so on and so forth. But let's move forward. So we want to see, this was last week's profit, so we know we generate for this week. So we end up here with 6,736. So this makes a $1,000 profit. We have a lot more trades this week, but these were single lot trades, so nothing to worry about. The statistics are still the same like before. Now we have 1,000 positive. So this week was positive 1,000. It's not too bad. However, we can do better than this. And we will be trying to improve this result. Anyway, I showed you everything. I think we can get to an end here very, very soon. So yeah, that's it. So going forward from next week, we will be doing only one account again. And hopefully I can do it from next week or the week after that to trade a real account with just to show you what is possible, what I believe is the right thing to do if you just start off, and what is the minimum you should be playing with in this market. I believe then we will be put on the right track and we can take it forward to the next level. But thank you so much for watching. I hope you have a good trading week next week, and all the best. Take care. Bye bye.